Hey guys, welcome back to the channel, and in today's video I want to show you how I got two trades using the FVG. So I just want to show you this whole trade setup, how I got it set up and everything. Then maybe later on I'll bring in the chart so you could see, because I'm already on the trade, but I deleted it so that I can just make this video, so nothing will be really confusing here on the chart here. Today's video, I will be showing you how I trade my FVG levels and what I look out for. So just so you know, I took two trades today using the FVG. One is on Euro USD and the other one is on VIX 10. That's the synthetic aspect of trading using derivative broker and the rest of it. So before you can actually trade, I always know when I have my high probability trade set up, and I know the kind of entry models I use to take a particular trade. Like there is a trade I shared today on my group, or not really my group, on a signal group I mean, and it was called out early in the morning, which was more like a high probability trade setup. It was an FVG trade, so I will show you the trade in no time from now, but let me just explain why I took this trade and how I was able to take it. You always want to do when you're trading is to actually start from your daily time frame or the weekly time frame to do more like a top-down analysis. Then know what you're actually trading for, know where you're going to, and where you want to stop trading. That's looking for your good point of interest and the rest. So let me just show you something. So you look at here, when I came into the chart today, I've not traded Euro USD in a very long time, so it was not really easy to navigate price action. But when I came to the chart today, I noticed that we have a break of structure on the 1 hour time, on the daily time frame. If you look at here, this is like a shift in market structure on the daily time frame. As soon as we got below this price action here, so this was like a shift in market structure to me on the daily time frame, and I saw this retracement happening here. So as I saw this retracement happening here, I was looking for a good spot that this retracement was going to stop so I can continue selling. So this is a long-term sell trade, just so you know, but I did not really get any confirmation or any level here on the daily time frame. I just know that we were going to fill up this liquidity void, this impulsive candlestick. So I went down to the 4 hours also. Now on the 4 hours, you can see we have this FVG inside here. Let me take this out. So you can see we have this FVG, but the FVG is so big and we don't know when we are going to fill up this FVG completely to continue selling. And I also want to be part of this market. And normally they say when you have a big FVG, you wait for the 50% level of the fair value gap so you can continue selling. But if you see, this did not even get up to the 50%. So I also went down to the 1 hour, which gave me precision though. Now on the 1 hour, after seeing this fair value gap here on the 1 hour here, I saw how price mitigated this fair value gap. So I went back to 5 minutes. So it was really not just hard. This trade was one of the easiest trade I've taken so far. In like, I don't know, for Euro years it was just too easy for me. So as I went down to the 5 minutes, I noticed that there was a shift in market structure here from this level here. Then on the 30 minute, I look at this chart also. Right in the shift in market structure, I saw this fair value gap that price retracing into. So I kind of met price filling up this fair value gap, which was quite very easy for me. So after seeing this fair value gap being filled here, right in the shift in market structure level, I took my trade entry from here. So let me show you guys. So I took my entry from here, from this level here, where sorry, I took my entry from here after price monster filled here. Then I had my stop loss to be right in this level because I didn't want to see price come back to do anything above the fair value gap. So now if you zoom in, we are almost at 1:3. Okay, this is 1:4 already because my trade is 1:5. Then during the course of taking this trade, so many things happened. So you can see there was a total retracement back to my entry point, but I just had to maintain composure and get off the market, knowing fully well that we left an imbalance at the entry level. Yeah, since it was a minimal risk of about 100 pips here from the entry, you can see there almost 130 pips. So I was ready to risk more. But yeah, risk that position. That was why I allowed it. Then if you check on the 30 minutes, I had price came back all the way to my entry to fill up this imbalance and continue going down. So this is like the first trade example that I used to take, or that I used fair value gap. It was the 1 hour fair value gap I used to trade. Look at it. You can see the 1 hour fair value gap. And I saw a confirmation in the 1 hour fair value gap here. This 1 hour fair value gap. Let me take you to the second trade example today that I traded using the FVG entry model. On the second trade here, which I took today on VIX10 using the fair value gap entry model, I also shared that one on the group I am in, where we do share signals amongst ourselves. So it all started from the daily time frame. Like, I always like doing my analysis from the daily time frame. And if you look at this is VIX10 on the daily time frame, I have a level I want to sell down to, which is this daily FVG. Although I'm not actually aiming the daily FVG, I know that this is a good point of interest here, this daily fair value gap right here. So I'm not expecting market to buy from this level when it can actually come back to this level. So that was the first thing I saw. When I came into the chart, I saw this daily candle trying to create a bullish move, and I know that we are not ready to buy because there is this daily FVG right here that we are supposed to fill. So I told myself I'll look for sales instead of trying to buy. That's this. So just when I went to the 4 hour time frame, I saw something here. Just when I went back to the 4 hour time frame, I saw this fair value gap around here. You can see this is a fair value gap right on the 4 hour time frame, and I called it a high probability trade setup because we are actually heavily bearish on this market. You can see just me looking at it, so we are very bearish. So what I saw this to be was like a retracement into the point of interest to fill up this level and continue selling, in as much as to go to the um, daily point of interest or weekly point of interest. But if we can get there, I'll know. If we cannot, no problem. So I went to the 5 minutes. So whenever I see my point of interest, I just go to the next level, which is a smaller time frame. And with the trend, that's what makes my trade high probability trade setup. So there's no need going back to the 1 hour, 30 minutes to look out for any other thing. So this trade actually put me out on break even on VIX10. So we did not really get to my target. Our target was this low, this low here. So we did not get to the target. So that's what happened here. You look at it from the 5 minutes. I got my entry from the fair value gap here of the 4 hours after a confirmation. Then, like, if you should zoom in, you can see that I have this confirmation here. Let me zoom in. Okay, looking at the 1 minute time frame, you can see that I have my shift in market structure as of this level here. So I had my shift in market structures at that level. Although it seems like, okay, sorry guys, this was when I saw my shift in market structure. So I saw my shift in market structure around here, and this was where price broke the last low. This was where price broke the last low, and I saw this retracement. Then I entered around here because for me, I had the confirmation. Yeah, I had the confirmation. And if you're not looking at it here, you see that price came and took out this high, this last high, still inside the 4 hour FVG. So still inside the 4 hour FVG, price took out that high, and I have already adjusted my stop loss a little bit from this level above to the area where we had the total fair value gap above a little bit here. That was why I did not get stopped out on this trade. Then also on the 5 minute, I saw another fair value gap here, which if I should zoom in, you see this was the fair value gap I saw when price was actually retracing. So there was no need to enter again. This would have been the right level to enter after the fair value gap here, but I already entered right at this arrow, so there was no need to enter the trade again. So you can see how I traded from that fair value gap to this level here. We even got a little bit further down but I got stopped out around here. I broke even around here. So price still came back to continue going before turning against me completely. So let me also show you another trade today I took using the same fair value gap. So these are three trades I took this week using fair value gap entry model. Now this is VIX 25. If you look at it here from how I always do my analysis, daily time frame. If you look at the daily time frame here, you'll see that I was looking out for the most recent place where price would come to, because today is Friday and I'm either looking for a continuation of the weekly time frame. Let me take out this period data. So because today is Friday, I'm always looking out for two things, either a continuation of the trend or retracement. So I always look out for two things. Now you can see we are very bullish on the weekly time frame. I went down to the daily time frame also. What I saw on the daily time frame was quite interesting. Now if you look on the daily time frame, you see that we have this fair value gap here. We have this fair value gap, and this retracement was supposed to come fill up this fair value gap. Although the gap is very thin, you might not really see a gap there. We also have a gap above here, which I'm expecting price to also fill. I was expecting price to fill before I did the trade. Now I also saw something like a sweep of liquidity below here, below this previous day low. This was a sweep of liquidity. Sweep of liquidity below there. So I went down to the 4 hours time frame. Now on the 4 hour time frame, you can see that we have this sweep of liquidity. Then if you zoom in, you see there's a fair value gap here on the 4 hour time frame. So I meant price mitigating the 4 hour time frame fair value gap, and I understood that after price has mitigated this fair value gap, there should also be a continuation here. Because if you look at it, we've already had our shift in market structure below here, sweep of liquidity. This was just like a retracement. Because it's on the 4 hours, that's why it's looking one. When we check other time frame, you're going to see more retracement on that time frame, like on the 1 hour. You're going to see more retracement. Although the charts here are quite noisy, but I think just to focus on where your market is actually heading to. So this is now my point of interest. So if I take you around here on the 1 minute time frame, you're going to see where I had my confirmation. Now on the 1 minute time frame, if I should take you down, you can see where I had my shift in market structure. Yeah. So if I should zoom in, let me take out this 4 hour fair value gap. So here you can see the last time price broke out from this level, this high here, where price broke out from, was where we had the shift in market structure, and you can see how we continuously moved up. So I was so lucky to meet price around here when the shift in market structure already occurred, and it kind of helped me minimize my risks also. So imagine risking just $2 for about how many dollar? 1:10. That's not in a light synthetics. So you see I'm risking $2 for about $20. So that's quite very, very good, and you can see how it played out. So just like that, we had price to actually play out this way. So after the entry, price came back again to fill up the internal range liquidity. When price coming into this level, it's actually filling up internal range liquidity. That's the retracement, then push out. So that's just it. We're almost at take profit, and yeah, I'm expecting price to go to my take profit. So even if I should close here, there's not really much difference. It's about $2 difference. So that's not really gonna do any harm. So I just close here, and that's just it, guys. So this week I took 3 good trades using just fair value gaps entry model. So if you want to learn more, I still have a playlist here on my channel where I talked about fair value gaps. You can do well to check out the playlist and also watch other videos to gain more understanding. I kind of did a full concept on fair value gap, but this one might not really be too interesting, or should I call it educational to you. So that's just it. Do well to also like and share the videos to your friends who might be having issues on fair value gap. Thank you for watching, and see you next time.